All right. Hello, everybody. This is Michael Clark, owner of Culture Shock Investments, here with you. And this is going to be our monthly market check. I'm going to start doing this in 2025. This is the first one of the year. These are going to be on the Culture Cave podcast for you to check out as well. So you got from TikTok to the Culture Cave podcast, and I will also be loading these on our YouTube channel. So make sure you're checking us out and Culture Shock Investments on all those platforms to catch these monthly updates. But let's get started with this month. It's February 16th, 2025, and we want to talk about what's been going on, I guess, from the beginning of the year up until now, and a lot of impact that I see these deals and actions having on the market going forward in the year. We already did our 2025 economic projections. Make sure you check that out on YouTube as far as where I see the market going this year and what sectors are going to be hot. But as we all know, we have President Trump in the office right now. So that could lead to a lot of volatility and change in the market based on what executive orders are being signed and what tariffs are being placed on countries. So we're going to acknowledge a lot of that in this session today. So one of the main things happening right now, which is hot on the streets, is the Ukraine minerals deal. This is something that is just unfolding over the last week or two because Ukraine and President Trump, Zelensky and President Trump are sitting down trying to negotiate some further protection clause for Ukraine against Russia. So Trump is essentially saying, if you want us to keep protecting you, then we want 50% of the earth mineral rights, the rare earth mineral rights that are in Ukraine. So he's essentially asking Ukraine to give up half of their rare earth mineral rights to us as the United States so we can now take advantage of those resources in exchange for our protection. Now, that's cool. And I'm not going to say I'm against that. I'm actually in alignment with a lot of stuff that's happening as far as with how Trump is negotiating with other countries. It may come off as brash and seem to the everyday person as he's doing a lot. And it's going to shake up a lot of what's going on in the industry, you know. But what's going to happen is it's going to shift the cost basis in a lot of different products. So you're going to see inflation in some markets, deflation in other markets with all these tariffs that's going down. So you got to pay attention to what deals we're making and what tariffs are being set. So with this Ukraine deal, let's say we get 50% of the mineral rights, right? That could help, decrease the cost of some production of certain goods and services in America. That could be a good thing for us. Is it a strong arm move? Yes, it is a strong arm move on Ukraine, but they do want the protection. So we got to make sure that we're not just donating billions of dollars to a country and our military might and protection in exchange for nothing, essentially. So I like that this is being put on the table with that deal. This Gulf of America stuff now, I don't know what that's all about. That's wild. So that's more of like a surface level thing that I think Trump's doing for his voters. Like the people that voted for Trump, he's doing a lot of that to appease them, even though this stuff doesn't really have an impact on the economy. It's more of a mental and psychological thing that he's playing around with and doing. And then the Gaza takeover, that's more substantial. That's not a mental and psychological. That is aligning with Israel and setting that up to be a platform in the Middle East that the America operates from. It's going to be a very strategic place for us to be located if we have a stronghold in the Gaza Strip, along with Israel, because we already have a stronghold with Israel. Israel is a close ally. We send them billions of dollars every year. So now we're probably just helping them expand their territory and get control of that area without them being seen as the only bad guys. Because if you remember before Trump got in office, it was like Israel is being the terrorists, terrorizing the people of Gaza, the Palestinians, how they were bombing them, the unfair advantages they had as far as weaponry and missile defense systems, etc. It seems like they were really being bullies, and then the world was looking at them as like murderers, essentially. Like they were going through murdering Israelites, and that's what people were seeing happen, and they were very much against it, speaking out against it. So now Trump kind of just came in and was like, this whole Gaza thing is essentially over. We're calling a ceasefire over there, but we're going to take over Gaza as America now. We're going to go in here and take over and say, this is our piece of land that we're going to help develop on behalf of Israel, essentially. But that is going to affect the economy in a way that that is something that can spark international conflict, I feel. So the more aggressive we are with doing that, the more aggressive I think Russia will be towards Ukraine. The more aggressive I think China is going to end up being towards Taiwan if we start moving like that. So we got to be careful, because those kind of moves will trigger a kind of sell-off in the market. So you got to pay attention to that kind of stuff. The stock market's not all just about charts and numbers. You know, you got to have fundamental analysis as part of your game, all right? So we also have this 25% tax on steel imports. Now, that is also a strong arm move being played by the president. So a lot of this tariff and tax talk you hear going on is not anything tied to an economy in particular. It's not solely based on economics and saying this is good for our economy, that's why we need these tariffs. It's more so to coerce these countries into doing other things that Trump wants them to do. So Trump wants Canada to become a state. And in order to do that, he's going to keep threatening these tariffs, I feel. So he's starting off with steel imports, and Canada is one of our biggest importers of steel. So I'm pretty sure we're one of their biggest exporters. I mean, we're one of their biggest consumers of their steel imports. And the 25% tariff on that industry is definitely going to affect their economy and that whole industry, rare metals industry, to an extent. So be careful if you invest in commodities that are tied to the steel, iron, or metal industry. And you're going to see a lot of fluctuation in prices in that industry. So be careful with this 25% steel import tariff. Do I think Canada is going to fold and become a state eventually because of this? It depends on if they keep stacking these tariffs. Like if Trump keeps stacking tariffs against them, like I said, it's going to either cause an implosion, internal conflict, or it's going to cause them to capitulate and say, you know what, yeah, we'll actually just become a state so we don't have to pay these tariffs anymore. Because that's essentially what he's pitching. You become a state, you won't have to worry about any of these tariffs. But that also gives us, as the United States of America, it gives us certain advantages in trading with Canada as well if they become a state, and tax advantages. So that's what he's pushing for on that end. That can affect the market as well when you're into commodities and rare metals. And the 25% tariff, when the news was first announced, it impacted the overall market, so everything kind of pulled back when we first heard about that news. But as people see how it's going to play out and what industries it really going to affect, the market kind of stabilized off of that. Interest rates. Let's talk about some interest rates now. Interest rates are holding steady. They didn't decrease interest rates further. The Fed decided to hold interest rates steady. And what that did was it triggered a negative response from the president. He was talking about how he wanted Fed Powell to decrease those interest rates. But at the same time, if we decrease those interest rates, inflation is going to keep going up, especially with these new tariffs that we're implementing. Trump wants to offset the tariffs with the interest rates, but that's not going to work, in my opinion, by lowering the interest rates and increasing tariffs on the countries. He's trying to offset the increase we're going to see in prices by lowering interest rates on the American people in the meantime. I think that will just lead to hyperinflation later down the line, so you got to be really careful, which is why the Fed is very careful about how quickly they cut interest rates. You don't want to just cut interest rates left and right and then end up in hyperinflation, and then the dollar isn't worth much of anything. And if the dollar starts to collapse, that's going to affect the whole global economy, which is why you see a lot of countries and people shifting into Bitcoin. The threat of that even being the case, too many countries feel like they rely on the United States dollar too much. So they want to shift their ownership into holding more Bitcoin. So you'll see Argentina, you'll see countries like Chile, you'll see the BRICS Union forming, which Trump is attacking heavily because that is a threat to U.S. dominance. If that BRICS formation continues to get momentum behind it, they get more crypto ownership, more Bitcoin ownership, that threatens our dominance as the reserve currency of the world. So we got to be careful, and I understand why he's attacking that heavy. Do I agree with it personally? No, but I can understand why he's going at BRICS so heavy. and attacking that and trying to set something up as far as a Bitcoin reserve for the United States. Because if we got our Bitcoin reserve and then they are dismantling BRICS, we are going to remain the dominant force as far as the United States, as far as the global economy, will remain the dominant force. So I see the strategic move there and why that's being done, but I don't agree with cutting interest rates in the meantime to offset what we're going to see as far as inflation because of all these tariffs that we're implementing on all these different countries on a country by country base, situation by situation basis, you know, which is real different from how it was first announced. How it was first announced, it was like, these tariffs are coming. We don't give a shit. You're going to get tariffed. You're going to get taxed. This is what we're doing. Anybody that we feel owes us for our protection or any, that's how the news came across at first. So that's why I shook up the market, and it was a little scary. Like, damn, how many people are going to be taxed? How much tariffs are going to be coming on to China and Australia and Africa, and we're going to be taxing Canada and Europe and Mexico. What are these taxes going to look like? And as time went on, you know, we got a little more clarification that these are going to be reciprocal based on what they're doing with us, and it's going to take a little time to figure out how much to tax each country, et cetera, et cetera. So that kind of calmed everybody down, and we said, all right, it's maybe not going to be as crazy as we thought or as quick as we thought. So the market resumed this upward trend, which is why SPY hit an all-time high on Friday. Shout out to the SPY, shout out to the SPY. You got to clap it up for SPY when it does that, because if you're in my community, the Culture Shock community, all Culture Shockers are encouraged to hold a long-term ETF like the triple Qs or SPY. So I've been in this group for about 4 or 5 years now, and we've been heavy SPY holders since SPY was in the 300 range. The SPY is now over $600. So that's a long-term investment that's paying out well for the community. And I want to keep that going as far as building that position, because the SPY is going to continue its trajectory up. It's going to keep growing. That's where the 500 largest companies in America are trading, and anyone that's slacking gets thrown out. So you don't have to worry about the S&P 500 getting any weaker over time. So that's why that's a smart place to get started. If you are a beginner investor, look at ETFs like the S&P 500 and the triple Qs, okay? So things that manage or track the rate of inflation, you have something called the PPI, which is the Producer Price Index. That determines how much producers are paying for their goods as far as materials, etc., to get the products produced, to get them out to the consumer. And the Consumer Price Index lets you know how much the prices are going up or down for us as consumers as we buy things in the store. So the PPI, Producer Price Index, well, let's start with the CPI. The CPI came in a little bit higher than expected last week, and that caused a sharp pullback in the market, right? Then we had PPI come out 2 days later, which was slightly higher than projection, but not as high, didn't come out as high as the CPI did compared to expectations. So the market kind of chilled out and relaxed. But we had a sharp little pullback from the CPI report, and then PPI, we kind of started rallying back up, and it relaxed, and we went into the weekend on a nice push. So always pay attention to CPI and PPI reports when they come out. Those come out once a month. Set the date on your calendar. If you're an active investor or trader, you have to know when those announcements are coming out. You cannot be out here investing or trading blindly, especially if you're an active investor. If you're long-term and you check on your portfolio quarterly, this doesn't impact you as much. But for my active traders and investors, you got to know when these reports are coming out. All right. Some more fundamental news, because, like I said, you can be very technical with the market and do things based off of price levels and charts, which I show my Culture Shockers how to do. But with a Trump presidency, you are going to have to stay tapped in fundamentally with what's happening in the news if you want to protect your portfolio. You cannot be caught off guard by some of his implementation of executive orders or shifts in the government as far as policy, as far as government positions that are valid or invalid that they feel like they need, such as they're getting rid of the Department of Education, getting rid of DEI. So you got to pay attention to stuff like that, because it's going to impact the economy in various ways. Like an example, the government layoffs that they're doing right now by cutting up all these sectors in the government as these programs they feel are unnecessary or doing wasteful spending. what that's going to do is that's cause an unemployment spike in DC, in the DC area. So a lot of those government workers are being laid off, and now they're going to sell their homes. They're going to rush sell their homes because they lost their jobs quickly and unexpectedly. So now what that does is when you have to rush sell your property, what are you going to do? You're going to sell it for less than what it's probably worth because you're trying to get out of there quickly. And what is that going to do? That's going to cause the housing market value in that area to drop. So the average house in the DC area is down $193,000 from its original value, or where it was trajectory, where it was going last year. It's dropped by $193,000 in the last couple of weeks because so many government officials had to move because they were fired from their jobs. So you're going to see things like that occur, and that's going to affect the real estate industry in that area if you're someone looking for property ownership, because investing is not just the stock market. I'm talking about investing and building your portfolio all around. So this affects the real estate market as far as how the pricing of houses are going to be in that area. This also may affect how quickly you're able to get, or what kind of rates you're getting in or out of, because I'm pretty sure a lot of those people bought their property at lower interest rates than what they're going to have to buy their new property at. So that affects a lot of people's lives, and that's going to affect spending, so on and so forth. So the more these actions take place, the more it leads to a domino effect that's going to affect the entire economy. The more this stuff tends to happen. So where it stands right now, I don't think this is going to be a major impact on the market, but if they keep laying off government workers and then these become more unemployed people and the unemployment report keeps increasing, that's going to cause a negative reaction in the market, especially if interest rates aren't coming down. And it could be a combination of things that end up causing a pullback in this market that's really trying to stay bullish right now. All right, so we got to pay attention to that. Now, that's the fundamental news for you guys this week, or for this month actually, because we're going to do this on a monthly basis. I want to talk about some of my favorite companies that I'm looking at this month. Like I said, I gave you the annual projections, but for my more active traders who look for things on a monthly basis, I'm going to give you a little bit of a gem every month in this podcast episode. And I want to tell you about Coinbase this month. So Coinbase just had a very strong earnings report. They came in, they were expected to be worth $1.81 per share. They came in at being worth $4.68 per share. So that's almost triple the expectation right there alone. And their revenue came in, it was expected to be $1.8 billion. It came in at $2.27 billion. So, and that is with their revenue being cut back based off of certain programs they implemented to try to increase their competition. So what I'm saying is that their revenue could have been higher, but it ended up even being lower. But they still beat the revenue expectations. So what I see going forward for Coinbase is more adoption, because crypto is being adopted more by the United States. This presidency is pushing heavy for crypto adoption with Elon Musk in there and his Doge task force. You know, crypto is going to be and the blockchain technology is going to be a crucial part of how we are going to be progressing as an economy in this country. So Coinbase is one of the biggest platforms, one of the most well-known and popular used platforms for crypto trading and investing. So I think that is a good place to jump in right now while they're underneath $300. They're underneath $300. It's a great time to jump in. They actually had a pullback. Even though they had great earnings, they had like a $10 pullback after earnings, which surprised me, but didn't surprise me because when you trade earnings, a lot of the time the reports you get, it doesn't always equate with the move that happens afterwards. So I've seen companies report terrible earnings and then the company prices jump 10-15% after earnings anyway. And then you have great earnings reports like this and you'll have a pullback. But that's just the risk of trading around earnings times, which I never advise people to trade earnings reports. So now that the numbers are in, we see the numbers, I have a solid conclusion on where I think the company is going based on these numbers. Now I'm going to open up a position or add to my option contracts that if I have some long-term option contracts. All right. So look out for Coinbase. And then you also have TEM, which is TEM. That is a tech company that is being pushed, honestly, by the AI development, but also the fact that Nancy Pelosi, everybody's favorite government official that invests in the stock market, that's everyone's favorite person to follow and see what she's invested in so we can invest in what she's doing. She opened up a position in them, I'll say about a month ago, and they were about $35 a share. And now, after that position has been opened by her, Tim has gone all the way up to $80 a share. We jumped in the culture shock community. We rode the wave from about 45 to 65, 70. I didn't see it going to 80. I got out at 65. I'm not even going to lie to you. But that push that has been making afterwards has been crazy. So keep an eye on Tim. I'm going to keep an eye on them for a little pullback because I think they're going to breach 100 before the end of this year. So I want to get in on a nice pullback and catch them on that and then ride the wave back over 100. Then we got ACHR, which is an eVTOL company, electric vehicle takeoff and landing. Is a whole new industry that's going to be expanding this year in the metropolitan areas, especially like LA, New York, Chicago, and even Miami, I'm sure. We're going to have eVTOLs down here. So ACHR is one of the leaders in that industry, in that sector, and it's a pretty new sector. So you want to get invested in that and start opening up some positions. I'll say long-term positions because this is going to be a little volatile early on because, like I said, it's new low-price companies. You'll see it go from $9 to $8 to $10, which is pretty big jumps considering that's over 10% in movement right there. So be careful with ACHR. Microsoft, I see Microsoft rebounding. So Microsoft could rebound and from the 415 area. Look for Microsoft over 415 for that rebound bounce, and then that could easily take off back to the 440, 450 range because they are lagging the market right now. They're lagging behind Nvidia, they're lagging behind Apple, and they're lagging behind the triple Qs. Everything is near all-time highs. All those companies are closer to their all-time highs and pushing towards it, except for Microsoft. Microsoft has been lagging bad. Them and Google. Google, after their most recent earnings, has taken a bad dip. But I do not see Google staying down in the 180s for too long. So look at these dips as buying opportunities. Do not run away and run scared when you see a little dip like this in these big blue chip companies. Look at these as buying opportunities to increase your position or open a new position if you don't have one already. Okay? And then we have Apple. To end this off, we have Apple with a big product announcement on the 19th. So that's this week coming up. We have Apple with a big product announcement I want to keep an eye on. I want to see what it's going to be. Is it going to be robotics? Is it going to be something AI related? Is it going to be something healthcare related? Is it going to be something like a new device, iPad or iPhone related? So let's see. Let's see if we're going to get something very innovative from Apple this time around, or are we going to end up with another shitty phone that nobody is caring about what the upgrades are. They're not major upgrades. They're not major enough to entice a rush or an upgrade cycle for people to upgrade their phones. So I'm hoping it's something in robotics because Tim Cook is really pushing this announcement, and it's very rare you see him come out in advance and talk about, you know, a new product they got coming out and how excited he is, or a new partner come into the Apple family. So a few of my suggestions would be I'm looking for robotics. I'm looking for a big partnership essentially with maybe another company that we didn't see coming, or something along those lines that could cause a nice jump in the Apple price. Apple has been pushing all week based off of the hype around that news and everybody getting prepared to see what Tim Cook is going to unveil. But let's see. I'm excited myself. I'm in the Apple position long term. I've been holding Apple for a while now, so I'm looking forward to whatever they reveal, and I hope it's something that is, evolutionary and pushes us further in this AI tech cycle that we're in. And they're not just becoming stale chips like everybody thinks they have been since Steve Jobs passed away, So let's see. I'm looking forward to it. Thank you for joining me this month for the monthly market review. We will be back again next month. I'm going to go live on TikTok, YouTube, and I'll be posting it on my social media pages. Follow us, Culture Shock investments on everything. Visit the Land of Culture shop and you can get some merchandise. We have shirts, we have notebooks, we have pants, we have everything as far as basic merchandise in order to rep the brand and rep the culture. Especially for Black History Month, we have a Black History Month sale going on right now. So if you go ahead to the Land of Culture website, you could go ahead and take advantage of our Black History Month sale. We have a Black History Month collection with some nice Mansa Musa shirts, some nice Maya Angelou gear, some good Aset and Osiris blankets that I have for sale. Definitely deep into the culture over here, hence the name Culture Shock Investments. So check out all the sites, and I will see you all next month for the next episode. Thank you.